Welcome to Griffonomics.
It's really good to be back today.
Yeah, it's great to have you. And today, we're doing something a little bit different. We're really setting the scene for you. It is Saturday, February 28th, 2026. And we're looking at a company that is attempting to, well, not just nudge the needle, but to completely shift the entire paradigm of psychiatric care.
Right, and we aren't talking about a small shift here. We are talking about a fundamental restructuring of how we actually treat the human mind. This is, I mean, you know this, it's one of those rare moments in biotech where the science, the business model, and the politics all just collide in a single stock.
Exactly. They all crash together. So the subject of today's deep dive is Compass Pathways. Ticker symbol is CMPS. Now, for a really long time, this company was sort of the poster child for the shroom boom, right? They were the ones turning magic mushrooms into medicine. But today, right now, in February 2026, the story has totally changed.
It really has. They have moved well beyond that initial hype phase.
Yeah.
This isn't just about a new pill anymore. It is about a structural shift from what we call chronic daily maintenance.
Which is taking a pill every single morning.
We're taking a pill every morning for years, often with diminishing returns, to what is now being called episodic interventional care.
Which, if I can just translate that into plain English for you listening, means you get treated once or maybe twice, and you are potentially good for months.
Precisely. It is the difference between renting your sanity by the day versus owning it for a season. And the stakes here, they really couldn't be higher. We're talking about millions of people who have been just utterly failed by the current system.
Yeah, failed is the right word. So here's the mission statement for this deep dive. We have a massive stack of sources in front of us. We've got press releases from just a couple of weeks ago, earnings calls, 10K filings, and some really nuanced political analysis from inside the Beltway. We are going to generate a granular investigative report on this transformation.
Because it is a transformation.
Right, totally. We are looking at how Compass Pathways has gone from a clinical R&D shop, guys in lab coats, to a potential commercial disruptor that is literally knocking on the door of the FDA right now.
And to do that effectively, without getting totally lost in the weeds, because the weeds are deep here, we need to structure this investigation around three critical pillars.
Okay, lay out the pillars for us.
Pillar number one is the data. We have the just-released Phase 3 results for treatment-resistant depression, or TRD. This is the make-or-break moment for absolutely any biotech company. It is the scorecard.
It's the moment of truth.
Exactly. Then pillar number two is the strategy, specifically what we are calling the Spravato moat piggyback maneuver. It is how they plan to actually get this drug to patients without spending billions of dollars building brick-and-mortar clinics.
Which is a super smart workaround. And the third?
Pillar number three is the Gauntlet. And this is where it gets incredibly messy. We are talking about the regulatory and political hurdles, the FDA, the Drug Enforcement Administration, and the White House. Because you have to remember, we are dealing with a Schedule I substance here.
Right. Okay, let's unpack this. Let's start with the absolute basics for anyone who hasn't been following every single tick of the biotech tape over the last few years. Part one, the business model and this concept of a technical moat.
Right, so let's look at the lead asset. The asset is called COMP360.
And I think we need to clear this up immediately, because there is still this pervasive misconception out there. COMP360 is not just grinding up dried magic mushrooms and putting them in a gel capsule, right? This isn't some agricultural product grown in a greenhouse.
No, absolutely not. If you grind up a mushroom, you get massive variable potency. One cap might have 5 milligrams of psilocybin, the next might have 20 milligrams. You cannot run a standardized medical system on that kind of variance. The FDA would laugh you out of the room. COMP360 is a proprietary synthetic formulation of psilocybin. Specifically, it uses something called polymorph A.
Polymorph A. It sounds like something out of a sci-fi movie or a video game. But in the world of pharma, this is actually where the real money is. Explain why a polymorph matters so much.
The best way to think of it is to think of carbon. If you arrange carbon atoms one way, you get graphite. It's soft, it's brittle, it's pencil lead. If you arrange those exact same atoms in a different crystal lattice, you get a diamond, the hardest substance on Earth. Same atoms, totally different structure. That is a polymorph.
So Compass basically found the diamond version of the psilocybin molecule.
In a way, yeah, they did. They found a specific crystalline structure, polymorph A, that is stable, it's reproducible at scale, and it has the exact right shelf life characteristics you need for a pharmaceutical product. But more importantly, from a pure business perspective, it is unique. And because it is unique, it is patentable.
And that is the key right there, because you can't patent nature. You can't patent a mushroom growing in a field in Oregon, but you can patent a specific synthetic crystal structure that you engineered in a lab.
Exactly. And crucially, that patent was upheld by the U.S. Patent Trial and Appeal Board, the PTA, back in June 2023. That was a really intense, high-stakes legal battle.
Which is a massive win for them.
A massive win. It officially secured their technical moat. What it means is that generic competitors can't just synthesize some generic psilocybin and claim it is the exact same thing as CMP360. Compass successfully argued that their specific formulation is structurally unique and legally protected. So even though psilocybin is a broadly known molecule, CMP360 is a walled-off protected asset.
So they have the moat. The walls are up. Now, they are currently a pre-revenue clinical stage biotech. They aren't selling anything yet. But they have a very, very specific target. They aren't going after general mild sadness. They are going after TRD.
Treatment-resistant depression.
Define that for us. Who exactly is the patient here? Because I think the layman often just assumes depression is depression. You're sad, you get a pill.
It is a very specific clinical classification. The strict definition is a patient who has failed 2 to 4 previous treatments during their current depressive episode.
So let's visualize this patient for a second. They've gone to their primary care doctor or psychiatrist. They tried Prozac, they waited the mandatory 6 weeks, nothing happened, or maybe they just got the awful side effects. Then they pivoted and tried Zoloft, waited another 6 weeks, still nothing. Maybe they tried Wellbutrin, maybe they did months of cognitive behavioral therapy, and they are still just totally in the hole.
Correct. And sadly, the numbers are staggering. We are looking at roughly 4 million adults in the United States alone who fit this profile. This is a chronic, refractory condition. These patients are suffering immensely, and they have very few options left on the table.
And usually the options that are left at that stage are either highly invasive or incredibly heavy duty. We're talking electroconvulsive therapy, ECT, or surgically implanted deep brain stimulation.
Exactly. It is a desperate patient population. Now, before we get into the new data they just dropped, we really have to address a technical elephant in the room regarding psychedelic studies, because this is something that has plagued the entire field of psychedelic research for 50 years.
You're talking about the unblinding problem.
Right. Let's talk about trial design for a minute. The gold standard in all of medicine is the double-blind placebo-controlled trial.
Which means neither the doctor administering the drug nor the patient taking it knows who got the real drug and who got the fake sugar pill.
Correct. So if you are in a clinical trial for a new blood pressure medication and you get the placebo, you generally have no idea. It looks like a pill, tastes like a pill. You swallow it, and you go about your day. Your blood pressure either drops or it doesn't.
But if you are in a trial for a high-dose psychedelic, definitely no. There's no hiding it.
If you get the active 25 milligram drug within 40 minutes, the walls are breathing, you are revisiting vivid childhood memories, you are having a profound, reality-altering psychoactive experience. But if you get a sugar pill, you are going to sit in a quiet room with an eye mask on for 6 hours, staring at the inside of your eyelid, just bored out of your mind. This is what the industry calls functional unblinding.
And it biases the data, right? Because the patient immediately knows they got the good stuff, so the placebo effect kicks in even harder. They literally expect to get better because they felt the trip. They think, well, I tripped, so I must be cured.
Exactly. It creates a massive expectation bias. Critics have always pointed to this and said, well, you didn't actually prove the drug works on the brain chemistry. You just proved that people feel better when they know they've taken a powerful mind-altering drug. So Compass had to design a technical moat around their trials to solve this specific issue. They had to mathematically outsmart the placebo effect.
And this is fascinating to me. They didn't use a sugar pill.
No, they didn't.
Yeah.
In their phase 3 trials, specifically the one we'll discuss called COMP006, they used an active control. They used a 1 milligram dose of COMP360.
So just a tiny microscopic amount.
Tiny. It's essentially subperceptual, or very, very barely perceptual. But they also included a 10 milligram dose in the mix in previous studies, and this design creates a spectrum of experience.
Why does that matter so much for the data?
Because it creates uncertainty in the patient's mind. If a patient feels something, maybe a little tingle in their fingers, a little shift in how the light looks in the room, a bit of somatic sensation in their stomach, they sit there wondering, did I get the low dose? Did I get the medium dose? Or did I get the high dose?
It perfectly preserves the mystery.
It preserves the blind. And scientifically, that is absolutely critical. It adds a layer of hard validity to the efficacy claims of the 25 milligram dose, which is the therapeutic target dose that you just don't get with a pure placebo trial. It proves that the 25 milligram dose is doing something pharmacologically distinct from just taking a psychedelic. It proves the magnitude of the trip actually matters to the clinical outcome.
Okay, so they built an absolute fortress of a trial design. They have the specific molecule, they have the PTA patent, and they have the methodology locked down. Now let's get to the main event, part 2, the strategic inflection point. We were talking about the Phase 3 data analysis that was just released a few days ago on February 17, 2026.
This was the data drop the entire biotech sector was waiting for. This was the binary event.
The headline seems to be fairly simple. They went 3 for 3.
They did. They met their primary endpoints in 3 consecutive trials. The Phase IB trial from a few years ago, and now the 2 pivotal Phase 3 trials, which are CMP005 and COMP006.
That is a rarity in biotech, especially in psychiatry.
It is exceptionally rare. Psychiatry is widely known as the graveyard of drug development. The brain is immensely complicated, and the placebo response in depression trials is notoriously high. To hit high statistical significance in 3 straight trials is a massive validator. It strongly suggests this isn't a statistical fluke.
Let's dive deep into COMP005 first. This was the single-dose trial.
Right. This was comparing a single 25 milligram dose against a placebo, a very simple, clean design.
And what was the primary result?
At week 6, they showed a negative 3.6-point difference on the MADS scale compared to the placebo group.
With MDARS being the Montgomery-Åsberg depression rating scale.
Correct. It is the absolute gold standard for measuring depression severity in these trials. A clinician sits down and asks the patient about their sleep patterns, appetite, suicidal thoughts, pervasive sadness, inner tension.
Contextualize a 3.6-point difference for us, because to a layperson, 3.6 out of 60 points doesn't sound like a mountain moving. Is that a lot?
It is highly clinically significant. The FDA generally looks for a difference of 2 points or more to prove a drug is doing more than placebo. So 3.6 is a very strong signal. And the p-value was less than 0.001.
Which means there is less than a 1 in 1,000 chance this result happened by sheer accident.
Exactly. It is a very robust statistical win. But the raw numbers on the page don't tell the whole human story here. What is truly fascinating here is the rapidity of the response.
The speed at which it works.
Yes, symptom reduction was observed and measured as early as day 1 or day 2.
I mean, just think about that. Traditional antidepressants, your standard SSRIs like Prozac or Lexapro, they take 4 to 6 weeks to even start kicking in.
And often with a lot of heavy side effects in the interim. You get the dry mouth, the insomnia, the weight fluctuations, the anxiety spike, all before you get even a drop of relief. Here, we are seeing a clear separation from placebo the very morning after the treatment session.
That completely changes the risk profile for a severely suicidal patient. You aren't telling them, hey, hang in there and fight for your life for a month while this builds up in your system. You're saying, hang in there until tomorrow morning.
Precisely. It is a rapid-acting intervention. But here is where it gets really, really interesting for the long-term play. It is not just about feeling better the next day. It is about how long that feeling lasts, the durability.
This was the major aha moment of the CMP005 data for me.
It was for the whole industry, honestly.
Yeah.
A single administration, literally one day in the clinic, showed durability lasting all the way out to 26 weeks.
That is 6 months.
6 full months.
Yeah.
The data showed that 25% of patients achieved a clinically meaningful reduction at week 6 and actually held that reduction without relapse all the way through week 26.
So 1 pill, 1 session, and 6 months of relief for a quarter of the patients.
For a quarter of the patients in the single-dose trial, yes. Now, the skeptics, and there are always skeptics in biotech, they might look at that and say, 25%, that sounds really low. That means 75% didn't get that long-lasting result.
That is a fair pushback, right? 25% isn't exactly a silver bullet cure-all for the population.
It isn't. But you really have to remember who these specific patients are. These are treatment-resistant patients. These are people who have failed everything else modern medicine has thrown at them. Their baseline response to traditional meds is effectively 0. For 25% of them to be essentially good to go for 6 months after one single treatment is practically unheard of. In this specific, highly refractory population, that is borderline miraculous.
But Compass didn't stop there. They knew 25% wouldn't be quite enough to capture the whole market and satisfy the payers. So let's look at COMP006. This was the repeat dosing trial.
This is where they intelligently tweaked the protocol to see if they could drive those responder numbers up. In COMP006, they administered 2 fixed doses, spaced exactly 3 weeks apart.
So you do treatment 1, Wait 3 weeks, then go back for treatment too.
Exactly. And they compared the 25 milligram dose against that 1 milligram active control we talked about earlier.
And what was the result there?
They hit a negative 3.8-point difference on the MEDUS scale. But more importantly than that top-line number, look at the underlying response rates. We saw that the rate of clinically meaningful reduction jumped from 25% in the single-dose trial to 39% in the two-dose trial.
So nearly 40% of these incredibly hard-to-treat patients had a meaningful response that lasted.
That second dose demonstrably deepened the response. It recruited significantly more patients into the responder category. It heavily suggests that for some people, the brain just needs that second nudge to fully reset the default mode network.
And there was a specific detail in the data about rescue dosing that I found utterly fascinating. This really feels like the commercial key to the whole thing.
Yes. This data point comes from the retreatment phase in CMPS 005, Part B. They took partial responders, people who got a little bit better after dose 1, but weren't fully out of the woods, and gave them a blinded second dose.
And what happened to them?
40% of those partial responders went into full remission.
Full remission. Not just feeling a bit better, but technically no longer depressed according to the diagnostic criteria.
Correct. And this is critical for the commercial argument. It tells doctors exactly how to prescribe it. It says, start with 1 dose. If they respond, but not fully, bring them back and give them a second dose, and you have a nearly coin flip chance of getting them to total remission.
That is a very powerful tool in a psychiatrist's toolkit. It creates a clear, logical treatment algorithm. It is not just take this daily and hope for the best. It is try this intervention, measure, then try this follow-up intervention.
Exactly. It systematizes the psychedelic experience into standard medical practice.
Now, we have to talk about safety. Because when people out in the real world hear the word psilocybin, they worry about bad trips, they worry about long-term psychological stability. Honestly, they worry about people jumping off roofs.
Which is largely a cultural stigma left over from the propaganda of the 1960s, but it is a highly valid concern in a strictly medical context. The safety profile across both of these phase 3 trials, which included over 1,000 patients, was generally very well tolerated.
What about suicidality? Because that is the big, scary black box warning printed on almost most traditional antidepressants today.
It was incredibly rare in these trials. They reported less than 1% suicidal ideation.
And ideation means simply thinking about it, not actually attempting it.
Correct. And crucially, these events were transient. They typically resolved on the exact same day of the dosing session. There were 0 completed suicides in the trials.
And what about the physical adverse events, the typical side effects?
Mostly exactly what you would expect from this class of compound. Mild to moderate headache, nausea, maybe some temporary anxiety during the onset of the drug effect as reality starts to shift. But I want to emphasize this heavily. Most adverse events totally resolve on the day of treatment.
So you don't go home with a month of chronic insomnia or rapid weight gain or profound sexual dysfunction, which are the absolute hallmarks of taking SSRIs.
Precisely. You have a rough, intense day in the clinic. Maybe you leave with a headache, and then you're done. The drug is completely metabolized and out of your system. You are carrying the chemical burden home with you to deal with every single day.
So the data is undeniably strong. 3 positive trials, extreme rapidity, 6-month durability, a clean safety profile. But as we both know, data alone doesn't make a profitable business. You have to be able to actually sell the thing.
Which naturally leads us to pillar 3, the commercial mode.
Part 3, the piggyback strategy.
The biggest, loudest criticism of psychedelic therapy from Wall Street has always been the logistics of it.
Right, because you can't just pick this up at a CVS or Walgreens on your way home from work. You can't drive through the pharmacy window and grab your psilocybin.
No, absolutely not. You need 6 to 8 hours of continuous, in-person supervision. You need a dedicated, quiet room. You need 2 trained therapists or monitors sitting with you.
Yeah.
It is incredibly resource intensive. It is very expensive to deliver.
And the skeptics have always pounded the table and said, how are you going to scale that? Are you going to go out and build 10,000 specialized psychedelic clinics across America? That costs billions of dollars. And Compass certainly doesn't have billions of dollars in the bank to do real estate development.
And that is exactly where Compass's corporate strategy is brilliant. They aren't building anything. They are piggybacking.
Break that down for us. Explain the piggyback.
They are aggressively tapping into what is currently known as the interventional psychiatry infrastructure. Specifically, they are looking at the vast network of clinics that have already been built and optimized for Johnson & Johnson's depression drug, Spravato.
Spravato is the brand name for esketamine, right?
Yes. It is an FDA-approved nasal spray for TRD. But just like CMP 360, it requires clinical observation. Patients have to sit in a clinic for 2 full hours after taking it so staff can monitor their blood pressure and check for severe dissociation.
So the recliners are already there. The dark, quiet rooms are already there. The specialized medical staff is already hired and trained. The receptionists already know how to process these complex insurance claims.
Exactly. There are over 6,800 of these clinics operating in the U.S. right now. They already have the intake workflows perfected, they already have the DEA safes, and know how to handle Schedule III controlled substances. Compass just needs to smoothly slide CMP 360 into that pre-existing pipeline.
It is basically like selling a new software program to a massive company that already bought all the expensive hardware.
That is a perfect analogy. You don't need to sell them the computer. They have the computer. You just sell them the high-margin program. And Compass has been incredibly busy signing strategic partnerships to ensure this software runs smoothly on day one of FDA approval.
Who are the big players they are partnering with here?
Greenbrook Wellness Centers is a major one to watch. They're the single largest provider of TMS transcranial magnetic stimulation and Spravato in the United States. They have 95 dedicated centers, and they are actively modifying their clinical workflows right now for day one readiness. They are changing their ambient lighting, setting up the rooms to be more comfortable for a longer 6-hour psilocybin session versus the standard 2-hour Spravato session.
And what about Journey Clinical? I saw their name in the filings.
Journey Clinical represents the decentralized telehealth adjacent model. They have a network of over 3,000 trained therapists. This directly helps with the therapy component, the preparation before the trip, and the integration after. Because you have to remember, you can't just give a patient the drug and send them packing. You need a professional to help the patient make psychological sense of the intense experience they just had.
And I also noticed HealthPort on the partnership list.
HealthPort is crucial for the public access argument. Their core focus is on Medicaid, Medicare, and rural access logistics.
Which is incredibly important politically because there is a huge risk that this just becomes a boutique concierge cure, something only wealthy tech bros in coastal cities can afford out of pocket.
Exactly. If this treatment is only accessible to rich people in New York and San Francisco, it totally fails as a broad public health intervention. Partnering with HealthPort helps Compensator proactively argue to the government that this will be rolled out with equitable access across all demographics.
But here is the major rub that I see. Spravato is already there. It is highly established. It is generating billions in revenue for J&J. Why would a private clinic owner switch to CMP 360 or even add it to their menu? Spravato takes 2 hours of chair time. CMP 360 takes 6 to 8 hours. As a business owner, I want rapid turnover. I want that chair empty fast so I can fill it with the next paying customer.
That is the intuitive first-level thought process, definitely. But you have to look closer at the math. Let's compare what we call the burden of care.
Okay, let's do a head-to-head comparison.
With Spravato, a patient needs 8 to 10 clinic visits in the very first month alone. Then they need ongoing maintenance dosing, usually coming in every single week or every 2 weeks. You are looking at a patient needing 25 to 35 separate clinic visits per year just to maintain the antidepressant effect.
That is basically a part-time job. Driving to the clinic, sitting there for 2 hours, getting a friend or an Uber to drive you home because you legally can't drive yourself. 35 times a year. That is a massive, crushing disruption to a person's life.
It is utterly exhausting for the patient, and it burns out the caregiver network. Now look at the CMP 360 model. Based on the Phase 3 data we just reviewed, you achieve a highly similar effect size at week 6 with only 1 or 2 visits.
2 visits versus 10 in the first month.
And potentially 0 visits for another 6 full months after that.
That is a staggering reduction in the logistical burden.
It completely frees up the patient's life. It frees up their family members. And paradoxically, it actually frees up the clinic's capacity.
Walk me through how that works for the clinic.
Think about it. If a Spravato patient is occupying a chair 35 times a year, that chair is essentially blocked out.
Right.
You are servicing exactly 1 customer with all that real estate. If a CMP 360 patient only needs that chair twice a year, you can treat 17 different unique patients with that exact same chair time.
So the overall throughput of unique patients radically increases. You can help way more people off your waiting list.
Exactly. It is a patient volume argument for the clinics. You churn through the massive TRD waiting list much faster, expanding your patient base.
But wait, if I am a clinic owner, I get paid by the insurance company every single time that patient sits in the chair. If they come way less often, don't I lose a ton of recurring money? Isn't recurring revenue the holy grail of modern healthcare?
That is the million-dollar question. If you cure them too fast, do you go broke? And that perfectly leads us to the economic integration piece of the puzzle. How do these doctors actually get paid for sitting in a room for 8 straight hours with one single patient?
Because if they can't bill insurance for it, they flat out won't do it. Altruism only goes so far in the American healthcare system.
Compass saw this exact bottleneck coming years ago. They proactively worked with the AMA to establish new CPT-3 codes.
And for you listening, CPT codes are the specific billing codes that medical providers use to tell insurance companies what to pay them for.
Right. If there isn't a dedicated code in the computer system, there isn't a payment. Compass helped create specific temporary codes for continuous psychedelic monitoring. And the absolute key detail here is that the code allows for hour-by-hour billing.
So the clinic bills for hour 1, then hour 2, then hour 3.
All the way through hour 8.
So the provider is fully reimbursed for the entire duration they are stuck in that room.
Yes. It completely fills the financial gap. It ensures that the doctor or the specialized nurse practitioner isn't bleeding money by monitoring a patient for a full day instead of seeing 20 standard patients for 15 minutes each. Without those specific hour-by-hour codes, this entire business model fails on day one. With them, it becomes highly economically viable. It perfectly aligns the financial incentives of the doctor, the clinical needs of the patient, and the long-term cost savings of the payer.
It really seems like they have thought of absolutely everything on the commercial execution side. They didn't just maximize the science of the molecule, they maximized the entire economic ecosystem around it.
They have certainly laid an incredibly solid groundwork. But as anyone in business knows, actually implementing it in the real world is always infinitely harder than planning it on a whiteboard.
Speaking of implementation, that takes cash. A lot of it. Let's talk about the war chest. Part 4, Financial Realities for FY 2025 and 2026.
Right, so as of February 2026, they just executed a major financing event.
They passed the hat around to Wall Street.
They did. And they raised approximately $150 million via a public offering and some strategic warrant exercises.
And what does that chunk of change do for their operational runway?
It solidly extends their liquidity all the way into 2028.
That is a really long runway for a pre-revenue biotech.
Yeah.
Usually these companies are living hand-to-mouth, stressing about cash 12 months at a time.
It creates a fortress balance sheet. What it means functionally is that they are fully funded through the NDA submission expected in late 2026, fully funded through the entire launch preparation phase, and well into the initial commercialization rollout.
So they don't have a gun to their head to go back to the public market and heavily dilute existing shareholders again in 6 months just to keep the lights on.
Unlikely. They have effectively bought themselves the time they need to execute the strategy. This removes a lot of the standard financing overhang that constantly depresses the stock prices of clinical stage biotechs.
But they are still burning cash really fast, right?
Yes. The estimated annual cash burn is running between $120 million and $145 million.
That is over $10 million a month going out the door. That is a massive burn rate.
It is high. But you have to contextualize it. They are running massive, highly complex global phase 3 trials. They are aggressively building out a commercial launch team from scratch. They are doing concurrent R&D on other indications like PTSD. This burn rate is actually quite typical for a late-stage pre-revenue biotech on the verge of a blockbuster launch. You have to spend huge money to make the drug real. The only important thing is that the cash currently sitting in the bank exceeds that burn rate for the next 2 critical years.
Risk defined, portfolio protected. Well, the portfolio is protected by that pile of cash for now. But now we have to pivot and talk about the severe risks that money simply cannot fix.
Part 5, the regulatory and political gauntlet.
This is where the story gets really dramatic. It is not just about clean science and billing codes anymore. It is about raw politics.
Let's start with the standard, by-the-book regulatory path, the FDA.
Compass is doing a rolling submission.
Yes. Because they successfully secured a breakthrough therapy designation years ago, the FDA allows them to submit their new drug application in chunks, basically module by module as the data becomes ready, rather than forcing them to wait and drop a 50,000-page document on a desk all at once.
And when is that entire submission expected to be fully complete?
They expect to finalize the NDA submission in Q4 of 2026.
What is the holdup then? The main data is out. Why not just file the whole thing tomorrow morning?
The main gating item right now is waiting for that durability data from CMPS 006. Remember, we have the great 26-week data from the first trial, but the second trial is still actively running patients to get that long-term tail. They absolutely need the 26-week numbers from the second trial to corroborate the first trial before the FDA will look at it. That specific data readout is expected in Q3 of 2026.
So Q3, the final durability data comes in, they package it up. Q4, they officially file.
Correct. That is the standard logical timeline. But then we hit the political friction.
The left field risks. We are in 2026. We have a new administration in Washington.
The Trump administration. And late in 2025, we saw a very interesting, somewhat alarming signal. Administration officials over at HHS Health and Human Services actively rejected an FDA plan to grant a national priority voucher for the fast-track review of psychedelics. This was specifically aimed at MDMA at the time, but the broader sentiment heavily applies to psilocybin.
Wait, so the career scientists at the FDA wanted to fast-track this whole class of drugs, and the HHS, who's essentially their boss, stepped in and said no.
Essentially, yes.
Yeah.
It starkly highlighted a growing friction between the career scientists at the FDA who just look at the raw MARS scores and say, this works, let's move, and the political appointees at HHS, who might be more inherently cautious, socially conservative, or just have entirely different administrative priorities.
Which introduces a massive amount of uncertainty. You don't really know who's actually driving the bus at the federal level. And just to be absolutely clear for you listening at home, we aren't taking any kind of policy stance here. We aren't taking a side. We are purely looking at this through the lens of timeline risk and administrative friction for the stock.
Exactly. The friction between FDA and HHS just introduces deep uncertainty. It strongly suggests that approval might not be a simple rubber stamp based on data alone. There is real bureaucratic tension there.
And on the other hand, you have the RFK Jr. factor.
Right. Robert F. Kennedy Jr. obviously has significant, well-documented influence in this administration's overall health policy. And there are widespread reports that he has clearly suggested that psychedelic therapy has real support from his camp. He has been quoted wanting sweeping approvals within a year for certain alternative modalities.
So you literally have one faction at HHS tapping the brakes hard, and another faction perhaps much closer to the president's ear slamming on the gas pedal.
Exactly. And as investors or market observers, we have to remain strictly neutral and just view this as extreme volatility. We don't know which faction ultimately wins the policy war. It creates pure timeline risk. Will it be approved in 6 months on a fast track? Or will it get bogged down and stuck in bureaucratic limbo for 18 months while they fight about it?
And even if the FDA finally says yes and the president signs off and HHS is happy, you still have the DEA to deal with.
The Drug Enforcement Administration. This is the final boss of the regulatory gauntlet.
Because psilocybin is currently Schedule 1, which legally means no medical use, high potential for abuse.
Right now, under federal law, it is technically in the exact same legal category as heroin.
So before Compass can sell a single solitary pill, it absolutely has to be rescheduled.
Correct. An FDA approval officially triggers a mandatory rescheduling review by the DEA. It will very likely move down to Schedule 2 or Schedule 3, acknowledging its medical use but keeping it highly controlled.
But that takes a lot of time. The DEA is not exactly known for its lightning speed.
It requires formal federal action, and this is the vital part that a lot of retail investors totally forget. It requires state-by-state adoption.
Oh, right. Just because the federal government says it is a Schedule 3 drug doesn't mean every individual state updates their local penal codes overnight.
Exactly. We saw this exact nightmare scenario play out with Epidiolex, which was a CBD-based drug. Some states have automatic triggers where they instantly follow federal scheduling changes. Others require their own slow administrative processes through state pharmacy boards or even full legislative votes in state assemblies. Compass is lobbying incredibly hard in Washington to tighten that window, aiming for a mandate of a 90-day post-approval turnaround. But it remains a massive logistical risk. You could potentially have full FDA approval but still be legally unable to ship the drug to major markets like Texas or Florida for 6 to 9 months.
It is a gauntlet. You have to pass the FDA data review, survive the HHS politics, wait on the DEA scheduling, and then fight for state-level adoption.
It is arguably the most complex, multi-layered commercial launch sequence in the entire history of psychiatry.
So given all of that, what does this actually mean for the future of the company? Part 6, future outlook, and final verdict.
Well, to start, Compass isn't just a one-trick pony. We have to briefly mention the rest of the pipeline to see the full value.
Looking beyond TRD.
right, looking at PTSD,
Yeah.
post-traumatic stress disorder.
They had some major news on that front in January 2026.
The FDA formally accepted their IND, their investigational new drug application, to initiate a phase I-free trial for PTSD.
That is a staggering market size and a truly tragic one.
13 million U.S. adults suffer from PTSD. And unlike depression, there have been essentially zero new pharmacological treatments specifically approved for PTSD in decades. The VA system is absolutely desperate for a breakthrough here.
So if TRD works, PTSD is the next heavy hitter stepping up to the plate.
It totally validates the underlying platform. It shows that Common P360 isn't just a quirky fix for depression, it is a transdiagnostic tool. The theory is that it works on the underlying neurological mechanism of rigid thinking, which heavily applies to anorexia, to PTSD, to TRD, maybe eventually even severe addiction.
Okay, let's wrap this up with a final verdict. You are the expert here. How do you view the investment profile of Compass Pathways right now, sitting here in late February 2026?
Looking at all the pillars, I would classify it solidly as a speculative buy-hold.
Why still speculative? The data is undeniably good. You said it yourself. They went 3 for 3 on the primary endpoints.
Because the clinical risk is de-risked, yes. We know the drug scientifically works. That is a huge hurdle to clear. Most biotechs fail exactly there. But the execution risk has now absolutely skyrocketed. Can they successfully navigate the DC politics? Can they get the DEA to actually move fast? Can they get local doctors to bill those CPT codes correctly without insurance clawbacks? Can they convince hundreds of Spravato clinic owners to adopt a radically new 8-hour workflow?
It is entirely an execution play now. It is no longer about the science. It is about aggressive business development and political lobbying.
It is. But you really have to look at the massive valuation gap. The current market cap is hovering around $550 million.
That seems incredibly low for a company sitting on a potential blockbuster psychiatric drug that targets 4 million desperate people.
It is incredibly low relative to the ultimate commercial potential. If they actually secure FDA approval and clear the DEA, the post-approval valuation could easily baseline at $1.5 billion or more. You are looking at a potential 3x return if they run this complex gauntlet successfully.
But if they trip up on the HHS politics or get stalled by the DEA,
Then that massive $120 million burn rate eats them alive. They will sit there spending that $150 million war chest just waiting for a DEA administrator to sign a piece of paper. That is the fundamental binary risk of the stock.
high-stakes poker.
The highest. But their cards, the phase 3 data, are very, very good cards to be holding.
So to summarize this entire deep dive for you listening, we have a proprietary synthetic molecule, CMP360. It has definitively proven itself in 3 rigorous phase 3 trials to be both highly rapid and highly durable, with one single dose lasting up to 6 months for a significant portion of patients.
A true scientific triumph in a field that hasn't seen one in decades.
They have a very clever capital-light strategy to piggyback on existing Spravato clinics so they don't have to pour billions into building their own real estate. And they have the cash pile to survive until 2028.
A very solid, well-thought-out commercial foundation.
But they are walking straight into a political and regulatory minefield at the FDA and DEA that is totally unprecedented.
A uniquely modern challenge.
Now, here is a provocative thought to leave you with before we go. We spent a lot of time talking about how they ingeniously solved the unblinding problem by using that 1 milligram active control. And it worked. It proved, beyond a doubt, the 25 milligram dose was pharmacologically superior to a microdose.
Yes, it secured the scientific validity of the trial.
But it really makes me wonder if we had to use an active, subperceptual psychedelic control just to prove this specific drug works. What does that say about every single other standard antidepressant trial in history that only used a completely inert sugar pill?
That is a very, very dangerous question for the pharmaceutical industry.
If the placebo effect is so incredibly strong in psychiatry that you literally need to make a patient trip a little bit just to effectively mask it, maybe the placebo effect has been doing all the heavy lifting for the last 30 years of psychiatric care. Maybe a huge chunk of the daily drugs we all rely on are just very expensive, heavily marketed sugar pills with terrible side effects.
It absolutely opens a Pandora's box for the entire legacy industry. If the public starts questioning the sugar pill baseline, a lot of blockbuster drugs suddenly look very weak.
And furthermore, if CMP360 works pharmacologically after just one single day in a clinic, what happens to the entire established business model of daily maintenance pills? If you cure the patient in an afternoon, you permanently lose the customer.
And that, right there, is the exact disruption that keeps big pharma executives up late at night. the shift from chronic customer to episodic patient.
It is going to be fascinating to watch this play out over the next year. Thank you for listening to this deep dive on CMPS pathways.
Always a pleasure to break it down.
Risk defined, portfolio protected.